Hello everyone, welcome to the Stock Trading Tutor channel. If you'd like to create a free Demat account with Alice Blue, click the link in the description and fill out your details. You'll also get intraday recommendation calls and you can learn robo trading software for free. Now let's look at the operating profit margin. So, what is the operating profit margin? This is a profitability or performance ratio used to calculate the percentage of profit a company produces from its operations prior to subtracting taxes and interest charges. It is calculated by dividing the operating profit by the total revenue and expressing it as a percentage. The margin is also known as the EBIT margin or the earnings before interest and tax margin. So, how to calculate the operating profit margin? So, it can be calculated by subtracting all the cost of goods sold and depreciation and amortization and all other relevant operating expenses from the total revenues. The operating profit margin calculation is the percentage of operating profit derived from the total revenue. So, the equation will look like operating profit divided by the total revenue will give you the operating profit margin, as you can see in the screen here. So, in the profit and loss statement, when we see the profit and loss statement, and here we have a sample, so we can see the revenue, gross profit, the earnings before interest, tax, and depreciation and amortization. So once we remove all of that from the total revenue, once we have subtracted most of those values, we will get the EBIT, which is the earnings before interest and tax, or also known as the operating profit. So once we divide this operating profit by the revenue, we will get the operating profit margin. So let's look at an example. So suppose a company has a $1 million in sales, which is the revenue, and a $500,000 in cost of goods sold and $225,000 in operating costs. So the operating profit margin will be calculated by, first we'll get the operating profit, which is 1 million minus the cost of goods sold and minus the operating cost, which is 225,000. So once we have gotten that, which is 275,000, then we subtract that, divide that by the total revenue. Once we have done that, we have here is 27.5%, and this is the operating profit margin. So how is this value significant? So the more profit margin you have, that is the more operating profit margin you have, you'll be able to pay for your fixed costs and the interest on debt. And if you have a higher operating margin, you'll be able to survive or better able to survive the economic downturns. And it'll provide you more competitiveness because you can offer lower prices than the company's competition because of their higher profit margin ratio. So, however, there are some limitations to all the information that can be given by this margin. One is that it doesn't provide much value as a standalone calculation, and it provides the qualitative information about a company, but it does not give any indication of the probability of the future results. Thank you for watching this video. For more videos on stock market and trading, please subscribe to this channel. If you'd like to create a free Demat account with Alice Blue, click the link in the description and fill out your details.